We're good, Dolly.
We are live now. Yep.
Alrighty. Well, it is 1 o'clock, so I will call this meeting to order. Special council meeting, May 27th, 2025. Welcome to all in attendance and those that may be watching online. I need a confirmation of the agenda as presented. Would someone care to move that, please? Monica, seconded by Jim. Thank you. All those, any in opposition? That is carried. Is there any declaration of pecuniary interest related to any item on today's agenda? Okay, not seeing one. If one should arise, of course, you can declare it at any time. Delegations and presentations. I'm going to, and I want to welcome Taylor. I don't see her very often. I don't think any of us see her very often, not nearly enough in any case. I'm going to ask Taylor to introduce our guests here this morning or this afternoon, and we shall go from there. So Taylor.
Great, thank you, Mayor Milne. I do have a bit of a spiel to go through just to explain what Brendan and Ori are going to go over,
Perfect.
and then I'll pass it off to them.
Excellent.
But while I have my soapbox, I may as well take it. Okay, so good afternoon, all. I wanted to thank both Council and KPMG for making this meeting happen today. I know that the last week or two has been a race to the finish line to get to our May 31st deadline, and it appears like we are going to make it. So that is absolutely fantastic news in the financial world. I cannot express my gratitude enough, and it makes my job a lot easier going into both 2024 and 2025 and even beyond that. It also allows the municipality to remain eligible for several funding opportunities that we rely upon. I also wanted to thank staff. The entire finance department has really rallied to get us here today. I will say on the Southgate side, it has been a struggle. This financial year saw much turnover. But as we look to the future internally, I see and hope for stability to get to the vision that I have for the department going forward. I do want to give an individual shout out to Renee Knowles, who's my deputy treasurer, for sticking with me through this. I'm not sure what I would have done without you, as I'm on maternity leave and it's been a season of struggle. I know it was not easy, and I really appreciate your help through everything. I also want to thank both Kayla Best and Jim Ellis for your efforts, of which I know they were great, and you helped me immensely through this entire process, and also for believing in me, not just believing in me, but the whole team to get this done. And I think that we've been successful with that. So I'm really proud of that. 2023 was still a year of transition in terms of moving to a new audit firm. As you know, 2022 was our first year with KPMG. So we had a lot of growing pains in that way, as is normal through any change in audit. We also saw a few differences in the financial presentation that we have to prepare. So there was a few changes there, which we saw through the ARO. But I just wanted to shout out all of Southgate and also KPMG because they did late nights as well, just alongside us. So I'm really grateful for both sides. Okay, and now for the financial aspect of this meeting. As council and public may remember, we budget operating and capital spending for the tax levy to bring in a zero net surplus and deficit. So no dollars at the end. Meaning we aren't, nor are we allowed to, through legislation, budget for a loss or a gain in any year. In saying that, you will notice throughout the financials that there is a significant accumulated surplus or revenue for the year, which I believe is just over $11 million for 2023. I ask that you keep in mind that this represents the difference between how municipalities are run on a day-to-day basis versus how financial statements are represented in accordance with PSAB, which is the accounting standards for public entities. This does not represent a true revenue on a cash basis for the township. With that, I will introduce both Brendan and Ori from KPMG, and I will pass it off to them to present their findings and opinion based on the 2023 financial year for the Township of Southgate.
Perfect. Thank you very much, Taylor. I'm just clicking share screen here, so give me 1 second just to get up to speed here. So again, Brendan Hall with KPMG. I'm an audit partner based out of the Kitchener office. Absolutely echo many of the comments that Taylor shared. We appreciated, her entire finance team's commitment to the audit process. As she indicated, this is our second year working with Southgate for the financial statement audit. But again, last year was with a previous controller. So really our first year working kind of side by side with Taylor through the whole process. As Taylor indicated, we do have a few accounting changes that added some incremental efforts to the Southgate finance team in the current year, and we'll walk through those changes. Ori, who is with me, is a manager at KPMG, and she's in our Kitchener office as well, and she'll speak to a few of our slides in our presentation as well. So I'll kick things off. I'll walk through what we refer to as our audit findings report, but please, happy to answer questions along the way. If council has anything, feel free to stop me along the way, or I can take questions at the end. And just maybe a thumbs up that you can see my screen sharing. Perfect, thank you. So our first slide that I'll stop on here is slide number 4. This is our audit highlights. I'm going to touch on topics high level, and then throughout the report get into a bit more detail. Every financial statement audit in Canada is performed with the concept of materiality, and that's based on the scope, the size of the organization, the financial statement captions, and the users of the financial statements. Our materiality for the year was $400,000. Now, that does not mean that we are only interested in things that are different or inaccurate by a magnitude of $400,000. We are doing our work to execute procedures to ensure that financial statements are materially accurate, but any difference that we identify in excess of $20,000 is reported to this group in our report. So I just want to make that clear. Materiality guides our audit and what we're doing and what we consider to be significant, but differences in excess of $20,000 would be communicated to this group. Our audit focuses on areas of the financial statements that are significant and that we think there is a risk that those captions could be misstated. And while on our bottom left-hand corner of our slide here, we identify areas of focus, we absolutely do work on a host of other areas of the financial statements, but our report is going to focus on where our team spent the majority of our efforts and time. Asset retirement obligations, as Taylor indicated, was a new accounting standard that Southgate had to adopt this year, like every municipality, and required a new way of looking at certain retirement obligations for assets to get that liability onto the township's books now, as opposed to dealing with that expense when remediation or activities were to occur. So you're kind of bringing that onto the books now and showing that there's this obligation in the future. When you do dismantle an asset or decommission an asset, there should not be an income statement or a P&L impact as long as our estimates have been reasonably and materially accurate. Obligatory reserves, again, a significant caption for Southgate, in excess of $11 million. So it's a very material balance, and it's a balance that is really viewed from a continuity standpoint. So every year there are additions to the obligatory reserve. There are also amounts that are transferred out of the obligatory reserve, which results in revenue for Southgate as certain development activities are executed. And so we perform work on both sides of those transactions. One, ensuring that the DC collections are appropriately recorded in the GL, and also that if Southgate's recording revenue, we're comfortable that those are on DC eligible activities and that the costs have been incurred in fiscal 2023. Tangible capital assets, again, very material balance. I don't have to explain that to this group. Each year there are millions and millions of dollars of additions, and we perform work to ensure that those additions meet the definition of a capital asset. Recall that a capital asset effectively defers your income statement impact, right? If it's a capital asset, it goes on the books and it gets amortized over a period of time, as opposed to being expensed right away. So we need to ensure that things that are being capitalized meet the definition of a capital asset. Cash, a very easy area to audit, and Ori's going to speak a little bit more in detail to that, but a very material balance. And so we're required to execute a number of procedures related to cash to ensure the balances that Southgate is reporting are accurate. In terms of accounting policies and practices, there were really 2 new public sector accounting standards this year of significance. Asset retirement obligations impact this entity, not massively, but we'll walk through the impact. The other impact was around financial instruments, which really impacted organizations that had certain types of investments. Southgate was not impacted based on the nature of the investments that they hold. And so no significant impact in that regard. We do have corrected misstatements, and we will those are in our report at the back, and happy to touch on those as we walk through the presentation. I'm not going to elaborate on technology highlights, but to take 30 seconds, the way an audit is done now is very different than 5, 6, 7 years ago. And technology continues to change how we execute audits with the view of getting better evidence, and more efficient evidence. So we use a number of statistical sampling techniques. We will get GL information from Taylor and Kayla and Renee. Those go through sampling tools. We don't necessarily choose what we look at, but the tool statistically looks at transactions and identifies where we need to gather certain audit evidence to get to where we are today. In terms of our status of where we are at today, I would say we are at the 97, 98% complete level, which is where we typically would be when we're holding these presentations with council. There is certain administrative elements that will happen over the next day or two to get financial statements issued with the KPMG auditor's report attached to the front. And one of the final procedures, which is typically in progress at this point in time, is getting our legal letter responses back from the lawyers so that we're in a position to issue our report. So I've touched on materiality. This is a little theoretical. I'm not going to propose we go through this, but I'll move to our slide where we kind of look at the numbers. So materiality for an organization that's public sector, typically, we acknowledge, as Taylor indicated, your budgeting and your thought process is to operate this organization on a zero-based budget. You're not in the business to generate an income. So unlike profit-oriented companies, we do not base materiality on your profit or your net income. What we do is we look at a revenue or expense metric typically for a municipal entity, and accordingly we've based materiality based on the previous year's revenue, which for this entity was north of $20 million. We are required to communicate if we are aware that there's involvement of management specialists, so management with the new accounting standard, and in particular the retirement obligation utilized specialists in their field for evaluating where certain assets were known to have required decommissioning efforts involved. We reviewed those reports, we reviewed management's assessments, and are comfortable with the accounting entries that have been modeled in these financial statements. In terms of our scoping, we're required to look into the entity where there's multiple components. So for Southgate, we've got the library, and we also have what we refer to as the main Southgate, which represents 99.x% of the balances from a revenue and expense transaction and a balance sheet standpoint. And so accordingly, our focus is on that main operating entity. We do perform a separate audit on the library, and that's really for standalone purposes and not to support the consolidated audit. So our focus is for the group audit solely at the township's main operating entity level. In terms of significant risks, every audit in Canada, and I want to make that clear, we are required to consider that management is in a unique position to override controls and perpetrate elements of fraudulent reporting in financial statements. So this is applicable regardless of you're an entity listed on the Toronto Stock Exchange, a municipality, a mom and pop shop restaurant that we may audit. We are required to go in with the assumption that we have to perform procedures to evaluate if there's any indication of override within the financial statements. So in addition to our substantive testing that we perform, which we're going to talk about for the rest of the report, we're required to execute certain procedures that can be looking at certain estimates and retrospective review of what actually has been recorded. And it's also typically performed through what we refer to as journal entry testing. And so journal entry testing, we get all of the GL activity from Southgate that's been recorded for the whole year, goes into digital audit software. We do work to ensure that we actually have all the data. And the way we do that is we ensure that our starting point to our ending point equals our trial balance from last year to our trial balance this year. That gives us comfort that we have the whole population. And our computer digital software goes through and looks for patterns in journal entries, which could be unique, account pairings that seem unusual, and looks for anomalies in the data, and then forces the audit team to go and discuss some of those entries that may at first glance appear unique or different or have a different fact pattern than the rest of the population. we are required to ensure that there's supporting documentation for what those entries pertain to. We did not identify any instances of management override in the performance of these procedures. In terms of asset retirement obligations, a new accounting standard, Taylor touched on this at the start of her report. This was a change in thinking in municipal accounting standards. So for buildings that could include asbestos, for landfills, which previously were accounted for under a different accounting standard, there is a concept that there's going to be future outlays of cash when those assets come to the end of their useful life. And the accounting standard for asset retirement obligations says we want that obligation on your books sitting as a liability, such that when those costs do occur 5 years, 10 years, 25 years, 50 years into the future, first of all, the liability is already on our books. Users of the statements can see that liability. And secondly, you're not then booking an expense in your statement of operations to reflect that. And so on adoption of this standard, the largest ARO relates to the open and active landfill. And that results in, I don't have my statements right in front of me, they're on another screen here, but about $700,000 of obligation that sits as a liability and will accrete over time as time passes, such that when the closure costs have to occur, that won't be an expense that resides in your P&L. So there's estimation in there, absolutely. Have we got that number to the perfect dollar? Impossible. But what management has done is they've worked to model based on available information, and with management specialists involved, what that reasonably reflects, discounted back to today's present value dollar topic. So that required some extra work on Southgate's finance team in the current year. This was a standard that they wouldn't have had to work through that analysis in previous years. Obligatory reserves, I think I touched on that at our highlights page, so I don't know that there's lots more that I'll add here. But really, what our team is doing is, management has recorded approximately $4 million of obligatory reserve fund revenue in the current year. And so, the risk from an audit perspective is that revenue has been recorded, but the township has not actually incurred those development eligible expenses. And so for a sample of those revenues that have been recorded during the year, our team has performed substantive work to ensure that, yes, we can see that in most cases, the capital asset has been expended, costs have been expended in fiscal 2023, and it's an eligible development cost for the DC study. So there's a few levels of kind of the testing there to ensure that we're comfortable with the revenue that's being recognized. And as revenues recognized, that DC pool of funds starts to draw down. So while we're doing work on the balance sheet for obligatory reserve fund, we're also doing work on the P&L side through the performance of those procedures. The last piece that I think I'm going to speak to before I hand the reins over to Ori is tangible capital assets. And tangible capital assets, a host of procedures that we're doing here. We're sampling additions from the lens of ensuring that we're comfortable that those assets, those items that Southgate has spent money on, are items that represent a multi-year benefit. If this is something that's been repaired, if this is something that's short-term in nature, the benefit to Southgate's going to be gone in a year. Those are things that should be expensed in your statement of operations, and they shouldn't be capitalized. Capitalized is for multi-year benefit items where that cost is spread over multiple years. And so our team performed substantive sampling of additions. Firstly, that's one of the larger areas of our testing. The second area is we actually look at what you've expensed in the current year to make sure there aren't things that you've expensed that are actually, capital in nature and should have been capitalized. The third area that our team focuses on with respect to TCA is with respect to any disposals and ensuring that gains and losses of those disposals are accurately recorded in the general ledger. And so if you're looking at your financial statements for the current year, in other income, you'll notice that financial statement caption is up quite a bit, year over year. And there was a sizable gain on disposal with respect to land that was disposed of in 2023. So our team ensured that the gain or loss was appropriately recorded in the GL. And we had a small audit difference that has been corrected for in the statements to reflect a difference that we identified. Ori, I'm going to now pass things over to you, and you can chat about our work that we've executed on cash. I'll still drive the slides here just so we don't hand things back and forth. But if you want to take things over, that'd be great. And if not, Ori, I will do it. I'm sharing screen, so I just can't see Ori on my screen right now. Scroll on. So I can't see Ori with my current view, but maybe I'll take over and I'll walk us
She's
through
still
that.
muted.
Yeah.
Oh, okay. Ori, are you able to jump off mute there? Okay. Ori, I'm gonna run with
Her audio isn't working.
Okay. I'll run with this. That's okay, guys. So cash, again, an easy section to audit. I don't want to make this sound more complicated than it is, but we as KPMG are required to communicate with your banks directly. So we work with Taylor to send the bank confirmations, but we actually maintain full custody of that process, both the submission of those confirmations and the receipt. So what we're doing is we're communicating with the bank. They basically are saying, here's what our balances are for the handful of accounts. There's more than one bank account at Southgate. And that's kind of step one. So we're ensuring that what the bank is saying is consistent with what management has recorded in the general ledger. And then there's a bank reconciliation. Every bank account has a bank rec, and they'll have outstanding checks or outstanding deposits. And we'll test a sample of those items to ensure that what is reflected ultimately in the general ledger is accurate. And so that's, again, not a complicated process, but you have a significant cash balance, and we need to ensure that that's materially accurate at the end of the year. Taxation and grant revenues, again, not overly complicated areas, but there can be differences that get identified in municipal auditing with respect to these topics. So taxation revenue, we really view from an analytical standpoint. We perform something that's called a substantive analytical, where we say we can get MPACS data on the assessment value for Southgate. We can obtain the bylaw enacted tax rates, and we should be able to develop an expectation on what taxation revenue is recorded for the year ending 2023. And again, we should be able to get that very precise. And so that's an analytical that we perform on taxation revenue. And again, we identified a difference here that's in our difference schedule, which stems from the Southgate collects the upper tier and the school board tax levies. Those hadn't been set up as a payable at December 31st, 2023. And so that has been a correcting entry that we've recorded as a result of our work performed. Grant revenues, our lens here is very focused on cutoff. So in audit language, cutoff is ensuring that grants are recorded in the appropriate period. It's not usually too complicated in terms of, booking the transaction, but the timing of booking that transaction can be an area where differences can exist in municipal auditing. And so for a sample of the grant revenues throughout the year, and with a focus around activity in the tail end of December 2023 and November 2023, we're ensuring that grants that Southgate is recording, they have performed their obligation associated with those grants such that it's appropriate to record that revenue, and that it's not that it should have been deferred until into the next fiscal year. So our lens is focusing on the largest grants, but I would also say it's focusing on grants that are being realized closer to year end, because we think that's where there's heightened risk that an error could be recorded. In terms of accounting policies and practices, we are required to communicate new accounting standards to this group that were adopted. Asset retirement obligations, I think we've talked about quite in depth. 3450 was financial instruments, and again, not a significant impact for this organization, given the types of investments that you hold. So where we do see other municipalities having an impact, and this is just, again, so that this group's aware of what could impact them down the road, we are seeing certain municipalities, and their financial statements are all publicly available, so I'm not disclosing anything that's not appropriate here. But many municipalities are getting into what's called these principal protected notes, where there's a derivative component of the instrument. So, you may accept a lower interest rate in exchange for some sort of exposure to an index or a market. And so the accounting standards for 3450 basically come out and say, if you have a derivative component of an investment, you are required to fair value that instrument. And fair valuing an investment is a new concept, relatively new concept under public sector accounting. And so that is an area where it didn't impact Southgate based on what you're invested in right now. But again, next year, 2 years from now, 5 years from now, to the extent you ever had those instruments, you would actually have a new financial statement in your financial statements, and it's called the Statement of Remeasurement Gains and Losses. And what that does is it allows users of the statements to see the change in value of the investment, but the gain or loss doesn't go through your P&L until the investment's sold. So it's kind of keeping a bit of the noise in the change in fair value outside of your P&L, but allowing users to understand if those instruments have increased in value or declined in value. So nothing of significance here for me to add on slide 18. So I'll move through. We did not have any differences that we identified in the performance of our work that management did not subsequently correct for. So I think that's a positive item and something to communicate again to this group. So if we identified differences, it was evident that the finance team and management wanted to reflect those corrections in the financial statements. If there was anything that was not corrected for, it would reside on what we refer to as our uncorrected schedule of differences. So everything we identified was corrected for in the draft financial statements that have been shared with this group. And so then lastly, we have our corrected misstatements, which again are in our report. I'm not planning to go through each difference, but if there was questions, I'd be happy to answer those. What is of note here is a number of these items reflect the recording of those ARO, asset retirement obligation entries, as management worked with KPMG to conclude on what needed to be reflected in the financial statements. So a number of those items are really a result of the adoption of the asset retirement obligation standard. So I'm not, in terms of the rest of the report, which is mostly appendices, I'm not planning to go through those appendices, but I would be happy to answer questions if this group has anything in particular that they would like to ask of Ori or myself, and happy to provide any context that we can. So I'll maybe pause there. Back to you.
Okay, thank you, Brendan, and thank you, Ori, for what you might have done had your video or audio worked, nonetheless. And thank you, Taylor, and indeed all of the financial team. So before I ask for any questions, I do need a mover and seconder to receive the report. So if someone would do that, please. Monica, seconded by Barb. Thank you. Okay, are there any questions or comments related to the presentation? Unless, Taylor, do you want to add anything now or?
No, I'm good with
Okay.
everything Brendan said. Yeah.
All right. So does anybody have any questions? I'm sorry, I can't see everybody. No, I don't see any questions. I don't see any hands. So that clearly means that Brendan did an awesome job. Oh, there's Barb. Barb, you have a question. Go ahead, please.
Thank you and good afternoon. Through you to Brendan, thank you very much. There was a reference, and this may be for Taylor as well. There was a reference earlier that by having this meeting, it allows us to remain eligible for funding. My question relates back to revenue and whether or not, so until the audit was complete, there was funding that was perhaps being held back. And I didn't know whether or not that had been accounted for as revenue or deferred. I'm not all of the different accounting processes. Have we accounted for that funding, or will we have an influx of revenue once this is submitted to the province? I guess is my one question.
So
Thank you,
I can
Barb.
answer this.
Go
So
ahead, Taylor.
for 23, we were on schedule for everything. We had our FIRs submitted, so nothing is relevant in that respect to the 23 statements. We will see that in 24 and especially in 25. I would expect to see an influx of funding through the government in the 2025 statements and lower than expected in the 2024.
Okay, follow up
Yep,
as well,
please.
just
Yep,
or
go
in
ahead.
addition to that, then as a result of us meeting the May 31st deadline, you referred to a May 31st deadline, Taylor. Once this is complete, will we be rolling right into a 2024 audit?
So our plan as of right now, based on myself returning in September, is to start the 2024 audit in November. And then after that point, roll into 25 in the spring. This is because we went longer on both KPMG side and Southgate side for the 23 audit than we had originally planned for. Ideally, we would have already been into the 24 audit by now. So unfortunately, things just happened the way they did, and we'll continue to do what we can going forward.
So through you, Mayor Milne, to Taylor, the extensive work that KPMG and you and the team have done for 2023 will put us in, it should be a piece of cake, right? Should be a breeze for you for 2024. Keeping our fingers crossed for you.
Brendan's smiling. I can see he thinks it's a piece of cake.
Well, yeah, I think like what's important to note. So I think there's been progress, in terms of, we were working with a different team in year one. At the end of our first year, we had kind of the new team come in. We've now got 2 years under our belt, if that's a saying I can use. We don't have significant new accounting standards coming in 2024. So I think when you take a step back, Barbara, and look, like back of the napkin math, I think 15% more incremental work this year than in other years based on the new standards. When we say all the work we've done makes it a breeze for the next year, I'd probably roll back quite a bit off that, because your P&L is entirely different. Your balance sheet is entirely different. Like I think what is fair, Taylor and us have a greater understanding of each other's, like what records do we do? How do we do this? How do we account for that? I think that is an evolutionary process that as you work side by side for a couple of years, that starts to evolve. But your revenues are all new in 2024 compared to 2023. It's not like the audit evidence I get in 2023 is audit evidence for 2024. So I just want to make sure that's transparent and fair, Taylor. But again, happy for you to elaborate or confirm or deny anything I've said there. But I think we've moved the needle, in my opinion, quite a bit from the first year. But as you enter a new year, I mean, all the transactions are new. So
Of course. Thank you. Thank
Thank you.
you.
Thank you,
I'll
Barb.
reserve my question for after.
Okay. Monica, I see you have your hand up. Go ahead, please.
Yes, thank you, Chair. Just through you, I just want to thank staff and the auditors for their hard work in getting this prepared. I know it's not easy. I just wanted to have a few questions, or just a few things that I noted with regards to several material accounting errors and corrected misstatements. So just wanted to make sure that going forward, again, to the point of Deputy Mayor, a lot of work has gone into this, and I know that we're getting back on track. So there was just a few things, and please correct me if I'm off base in any way. Just some things like errors in taxation revenues and liabilities to upper tier government, school boards, tangible capital asset misclassification, amortization, improperly recorded development charges and deferred revenues. Just a few things. I know these have been corrected, as well as the asset retirement or the AROs for landfills and infrastructure. So just with those in mind, they've been corrected. Just wondering, just going forward, just so that, make sure we have public trust and we're going the right way with all the work being done. Were these errors like systemic, or were they isolated? And have we put something in place now that will ensure that these types of misstatements don't reoccur?
Yeah, so with respect to the development charges, that was an outstanding uncorrected item from 2022. So that entry should have been recorded in 22. The only reason it showed up in 23 is because it wasn't recorded, and we didn't realize that until KPMG took over our books. With respect to the school board, coming from a private entity, there are lots of things that I'm learning through the audit process. So I didn't realize how some of those accounts interlinked. So it was just a change from we thought that it was revenue, or I thought that it was revenue. We actually owed it back to Grey County, and we actually owed a piece back to the school board. So those are all things that I will look for going forward. And then with respect to the ARO, like Brendan had mentioned, on Southgate side, we didn't put through any entries because we knew that was such a huge undertaking. And so scrutinized on their side, and rightfully so, that we weren't going to put any entries through until they confirmed the numbers that we had. So we had gone through many third parties to get evidence for those, which is why they're considered correcting statements, correcting entries. Ultimately, they're just the entries that went in. We just didn't do them because we weren't going to put in entries that had to be corrected again.
Just a quick follow-up, Chair.
Sure. Yep. Go ahead, please.
Thank you, Treasurer, for that. And I do acknowledge 100%, like coming over from a private into municipal. It's just like some of us who worked in municipal and now we're on the council side. So I can certainly understand the learning curve and all of that. So I do hope that there is any thing that would be needed to help support that better, because your role is so key. And just another quick question. Do we have a possibility, or it may already have been implemented, to have quarterly internal reviews to avoid any kind of year-end surprises? This is not specific to the statements that were corrected. This generally, has that been a consideration? Just to kind of stay abreast on top of things like.
Yeah, absolutely. Once I return, I hope that we would get into regular updates to both management side and council side. I would like to be definitely more on top of management, even on a monthly basis and maybe quarterly basis to council. That's my vision going forward. Unfortunately, I've just been kind of swamped with 22 and then 23, but that's where I'm going. So I hope that we can just be patient getting there.
Awesome. Thank you so much.
Yep.
Thank you. Thank you, Monica. Joan, I see you have your hand up. Go ahead, please.
Thank you, Mr. Mayor. You know what? I was going to ask about the misstatements because there were just different slides, materials, significant, whatnot. But Councillor Singh-Soares did ask the question, so I did get my question answered.
Very good. Thank you. Any other questions here on this particular one? Okay. Anything further, Taylor?
No, I think I'm just looking forward to 2024.
Okay. I think Brandon is too.
Mhm.
All right. Okay. So the motion is on the floor that we receive the KPMG audit finding for 2023 for information. Is anyone opposed? All are in favor. Very good. Thank you so much. That carries. So moving on to reports and associated bylaws, we go to the finance department. Brendan and Ori, do you stay for this piece or no?
I think we'll drop off through you, Mayor. We might stay for the financial report, but then drop off after that, if that's okay.
That's absolutely fine. I know this is stellar television to watch this time of day, so
Well,
you're-
and we're coming up to June 15th, which is a pretty chaotic time in our world. So if we get a few minutes back, I won't argue with you.
All right. Well, I want to say thank you very much for the report today and all the work that you've done, both you and Ori, and indeed all of your team at KPMG as well. So thank you so much
Perfect.
for that.
Thank you very much. Have a great rest of your meeting.
Yes, sir.
Bye-bye.
Okay, Finance Department, we have a report there for the 2023 financial statements. Be it resolved, the staff report, FIN 2025-020 be received for information. And the council approve the corporation of the Township of Southgate consolidated financial statements. Someone care to move that, please? Joan, and seconded by Jim. Thank you. Taylor, please.
Yep, yeah, so I don't have much more to add. Essentially just that I hope that council receives these. Well, as I've noted, the May 31st deadline, that is to go forward with possibly applying and getting approved for Infrastructure Ontario loans, which we know that is kind of the key thing we're waiting on. Without that, we have to go to external market, which may mean higher interest rates. So I just hope that we take the financial statements as they are, and if you have any more questions relating to them, I'm happy to answer.
All righty then. Very good. I see Barb, you have your hand up. Go ahead, please.
Thank you, through you to Taylor, and thank you, Taylor. This is yeah, we're very excited about moving forward, right?
Yeah, I
And
am.
everyone worked so hard to get here. So I think it relates to seeing a surplus in the millions.
Mhm.
And I know that that is just a change in accounting, how we report.
Mhm.
But for the average person like me, or anyone watching this or reading the financial statements, it would seem that, we have, we got 20 million in revenue, but we didn't collect that from taxation.
Mhm.
And our expenses and our asset is showing this huge surplus. It's not because people think that they're paying too much tax to begin with. Well, if you've got this much of a surplus, then why are you charging tax at all? Could you just elaborate on what the revenues include? Because Brendan did mention that, where you draw from reserves, we have to account for it and we put it in reserves for our savings account for future use. But then when you take it out, it's revenue.
Yeah.
Just wondering if you could just explain that in really simple terms, because we don't have such a huge surplus
Yeah.
from what we collected as taxation and what our operating expenses were.
Absolutely. Yeah, so I'll take that in two chunks. I'll go first with the surplus and then with the revenue related to development charges. So with the surplus, you have to kind of think of this as any sort of adds or minuses that don't include cash. So amortization is a non-cash entry that we have to post on our books that adds to either the surplus or deficit that accumulates at the end of the year. So obviously amortization would take away from that. There are lots of other, sorry, helicopters going by. There are lots of other gains that would also correspond with non-cash items, such as we sold the land to Flato along Highway 10 for the Eco Park development, which was we sold it to them for 4.93 million. So we have the cash element, but we also have the gain. So because we bought that land, or that land was valued to Southgate originally, I think at 198,000. So that gain is just accounting standards that we have to record on the books. It doesn't mean that all of that was cash. Anything else would be like, so what Brendan alluded to, like changes in investments. If they're on the market, we have to record them in that way. Although we didn't really make the cash, we don't really have the revenue to account for it, but we still have to record those gains. So that's kind of where those elements come into play. Off the top of my head, those are the main ones that fall into that category. I know that you can see in previous years, even last year was 7 million. Obviously, this year is a significant gain compared to that, with the majority of that difference being in the land sale to Flato. And then to the development charges. So development charges on the balance sheet are listed as a deferred revenue. So essentially a liability that Southgate owes out. I know people probably think of it more as an asset. We have a bank account with the development charges in there, but it's actually that we owe that money back because we owe that money back to the community essentially. So when we draw from those deferred revenues in terms of accounting, we consider that revenue. So only at that point will we put it on the income statement. And that's why it's considered revenue. which also goes into that surplus as well, because we've already brought the cash in. We've noted that in previous years, but now we have this $4 million draw on deferred revenue because now we're going to recognize that revenue in buying the assets.
Thank you.
I hope that makes sense.
Which is all to say why I'm not an accountant. Thank you, Taylor. Actually,
Some days I wish I weren't either.
no, actually, that made a lot of sense. It really did, and it's very helpful. As many times as I've heard, similar descriptions, it resonates every time. So thank
Okay.
you.
That's good. I'm glad.
Monica, I see your hand up. Go ahead, please.
Thank you, Chair. Just through you, to Treasurer. I had like several questions, but I'm just going to pick the ones that I think is most relevant. One of them was just with regards to development charges and deferred revenues. So with the 4.3 million in DCs in 2023, our deferred revenue balance dropped significantly. So do we anticipate any DC shortfalls given the projected growth in infrastructure demands?
I believe we would have to lean on the DC study for that, which we are currently going through. I'm currently working on getting 24 organized. I have issued that information to Watson's, but yeah, I would rely more on them for that. I think that the DC study, from my understanding, I can see there's several projects that this spending can happen from 2022 to 2046. So we could spend the DC money in any of those years. It's just that we do DC studies 5 years at a time. So it would just depend on when we want to purchase those items and when it's feasible.
That makes sense. Just a quick follow-up, Chair.
Yep, please.
Yeah, so thank you, Treasurer. Just to the point again of Deputy Mayor, that was my other question I was going to ask in regards to the surplus and that, having cash on hand versus most of this being, I believe, in capital assets, just, having like the liquidation and all of that. So I appreciate that question being brought forward because it was a wow, like we have money, but it's like, no, we have to understand what it's about. So thank you for overall, I find that the statements to be quite prudent in financial stewardship on the side of Township of Southgate, and also just a continued transparency in making sure that we have sustainable and proactive plans. So just thank for this good report, good timing for it as well.
Mm-hmm. Yeah, and I would just add that although the 2024 audit isn't starting until the late fall, that was in a lot of deliberation internally and with KPMG to ensure that we have all of our ducks in a row. Because I know this was definitely a difficult year. A lot of the accounts had to be reconciled for up to 10 years that we were correcting items. So that took a significant undertaking for staff and myself. But I'm confident going forward that we have those in place and we have processes in place because of that, which I think was needed. And I can only hope that everything gets better from here and that we have plans in place. And also coming from the private sector, I have been audited in many different fields. But I think that I'll also bring that into the Township of Southgate in making better plans going forward.
Excellent. Thank you, Taylor. Any other questions? Okay. Not seeing any more questions. I'll call the question. Is anyone opposed to receiving this report? Seeing no objection, I'll declare that is carried. So we have no closed meeting. We have a confirming bylaw. Would someone care to move that, please? Jim will move. Jason will second. Anyone opposed? No opposition, so that is carried. Motion to adjourn. Monica and Jim. Anyone opposed? No opposition. Imagine that. So we are adjourned.